Alrighty guys, what is going up? Hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about the top stocks for passive income. This video is really designed for people who are starting to get into dividend investing. So I hope you guys enjoy it overall. I hope you guys learned something. Also, if you guys want to sign up with Moo, you guys can get a free stock just by signing up. So make sure you guys check that out. First link down below. So now let's jump into it, roll the intro. Let's go. Bam! So when you guys are starting to look for dividend stocks, you guys are going to see this thing called dividend yield. So this is really just a percentage that the company is going to pay you. So I have to ask you guys a question. What do you think is better? A reliable company that pays a 3% dividend or an unreliable company that pays a 7% dividend? Well, I'm sure a lot of beginners tend to go towards the 7%, but realistically, you want a high quality stock that pays a nice dividend, so you get the asset of the stock going up in value, and you get a nice paycheck every quarter. So now let's actually go ahead and look at the top stocks that I would highly recommend. Alrighty guys, so the very first one here is ticker symbol HD. This is Home Depot. I'm sure you guys know what Home Depot is. The thing that I love about this one so much is we have this beautiful upward trend right here. And then do you guys see this little cash sign? This means a dividend paycheck. Now looking at the dividend history here, you guys can see that the annual dividend is around $6 and the yield is only 2.4%. I know a lot of you are going to be saying, well, Carter, we want stocks with a higher dividend yield, but we want high quality stocks that go up in value as well. So we're going to be getting the asset of the stock going up and a $6 paycheck each year just for holding the stock going up in value. And I think that's a no-brainer. Also, this stock was extremely undervalued right now. Right now it's trading at around $240. So I do think we could still get in a fair buy around $220. I think that's the best price point to get in at. But overall, I would highly recommend setting some alerts here and really getting into the stock. But if you guys want to actually go ahead and buy some, you guys can. And then if the stock falls, just average your position down or use dollar cost averaging. That's what I would highly recommend doing. So the second one here is ticker symbol MCD. This is also known as McDonald's. I'm sure you guys know McDonald's. They're everywhere. They're literally on like every street. So same thing as Home Depot. We have this beautiful upward trend. Also, we have paychecks. We get dividend. So let's go ahead and look at McDonald's dividend history. This is about $5 per year, and the dividend yield is a little better than Home Depot with 2.6%. But the thing about this one is it is a little on the cheaper side. So if you actually want to go ahead and buy more shares, this is going to be the company that I would highly recommend doing. And you get $5 per year just to hold this stock. I love actually getting in this one. I do think right now is still a fair buy. Right now in the RSI, it's trading at around a 51, so it's still a little undervalued as well. So if this stock goes up to the highs, we're sitting back, relaxing, and making some profit. What I would highly recommend doing is setting some alerts down here, maybe at 150, 175, and 180. So if the stock falls, you can go ahead and average your position down as well. So the next one here is VOO. This is Vanguard's S&P 500 ETF. I felt like I should put in an ETF because ETFs are one of the best ways for beginners to start investing in dividends, just because you get diversified literally with the click of a button. Just by buying one share, you get diversified into over 500 of the largest stocks on the stock market. But the thing about this is, it's a little more expensive at $282. Also, let's go ahead and look at the dividend history because that's really the idea of this video. So Vanguard's S&P 500 ETF, you guys can see it's not available for because it's an ETF, so it's kind of hard to judge. But looking at previous payout dates, you guys can see $1.17, $1.42, $1.30. So you're going to get it around every quarter. So this is one that I would highly recommend getting. All right, so the next one here is ticker symbol O. This is Realty Income Corp. The thing that I love about this one is it is a REIT and it is a monthly dividend stock. So you can just relax and every single month you're going to get paid a dividend. But I do think right now this stock may be a little on the overvalued side. So what Realty Income Corp is, it is a REIT. So they do have to pay 90% of all revenue towards investors in dividends. So you guys can see all the dividend payments here. But right now I do think it is a little on the overvalued side, trading at around $62. The reason why I say it's overvalued is because right now with all this uncertainty in the markets and people are just starting to go out and go shopping and stuff like that. So how the Realty Income Corp works is they actually go out and buy properties, and then when those tenants pay their lease, you guys get a dividend from it. So it is classified as a REIT, which they do have to, by law, pay 90% of all revenue towards investors as dividends. So let's actually go ahead and look at the dividend history for this one. So that's ticker symbol O. You guys can just go ahead and go there. So you get a little better yield here of around 4.6% and around $2.80 annual dividend, which is actually pretty good, and the dividend yield is pretty good as well. And when this stock fell all the way down here, the dividend yield was like literally like 12%. So I would highly recommend setting some alerts here, but really this one I do think is a little overvalued, but I do think it is a good one to get into because you know you're going to get a monthly paycheck and you don't have to really worry about it. You know you're always going to get one. So now moving on here to the last and final one here is Disney. I do think Disney is a great dividend stock to have. You get a nice paycheck every single quarter, and Disney is one of the largest companies in the United States. They are the media powerhouse. They have multiple streams of revenue, and they own a ton of companies such as Marvel Studios, Lucasfilms, and a lot of the very, very popular movies I'm sure you guys see, Pixar, all of that. They own that. So they have a ton of cash coming in. So they pay their investors. So let's actually go ahead and look at Disney's dividend history. Ticker symbol DIS. Just like that, Walt Disney. So the thing about this, it is the dividend yield is a little lower here, but the thing that I like about this one is it does outperform all of the major indexes, S&P 500, Dow Jones, the NASDAQ. This is a great long-term stock in my personal opinion. So that is it though. I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash the like button. We'll see you guys tomorrow in another one. Remember to stay happy, stay positive, and overall stay safe out there. We'll see you guys tomorrow. Also, don't forget about Moomoo. You guys can get a free stock literally just by signing up. And then if you guys deposit $100 or more, guess what? You get another free stock. So now we'll see you guys tomorrow. Take care, guys. Roll the outro.